it's a brand. It's the Barclays Bank. It's NatWest. It's, you know, the high street. Sorry if there's any of them in here. Apologies, but it is what it is.
Don't even apologise for that, man.
I got my insurance through Barclays Bank. And they'll try and throw it in your face. And I'm like, okay, did you read your small print? And then they'll say, okay, why? What's with the small print?
What you've just explained to me, I need to ask my mum if she's got insurance, because I ain't got the money to bury my mum or dad. So I need to speak to my parents. I need to speak to my siblings.
So I had this conversation with my mum as soon as, you know, I became an advisor. She said, I need to be the first person insured. So I said, okay. I said, sit down, mum. So I said, how much you want to leave me when you're gone?
What happens if you have a policy that goes to 55 and, you know, I mean, God bless, you live past that? What happened to that policy?
So that policy ends, but this is where we come involved, because what happened was you went to somebody who just wanted to sell you a policy so they could get what they were getting.
Of course.
Now, what we've done,
what we're afraid of.
What most people are afraid of, and what we've done, what we try to dispel, is that I'm not here to do that. I'm here to put in a policy that you can afford, that's best for you right now, and I'm giving you the knowledge. I'm not trying to sell you something. I'm giving you the knowledge, and I'm making an informed decision with the knowledge that I've provided to you. Now, the trust level, you're right. There's a lack of trust around insurance, and people have done untrustworthy things because they're thinking about their pocket.
Absolutely.
All right? So it's about being in front of someone who actually cares about you. Now, I care about my community. Mm-hmm. I want you to have these things in place. It's about care, but some people don't, all right? So that trust level is for you. You might speak to me and say, boy, I mean, I trust Paula. But you speak to Sharuk and say, oh, I trust Sharuk. So it's about how the rapport, what you build up, because you will know if someone's just trying to do something quick and let's get this in place.
And I'd imagine, obviously, if you go out to a restaurant, you go to see a play or go to a concert, you're going to go off word of mouth and feedback and recommendations. Yeah. So where would you get that guarantee in your industry that this person's reputable and you can depend to a degree on their judgment?
I think exactly what you've just said. When I got into the industry, I've already got a level of trust for the work that I do anyway. So when I added on this as an additional service, people were already like, I know Paula's a real one. Now, when I've done their consultation, they're like, Paula, wow, I've spoken to other people, but you've just made this so easy for me to understand. Now, I'm going to go put my pen in place, and now I'm going to tell my friends, because actually, what you've just explained to me, I need to ask my mum if she's got insurance, because I ain't got the money to bury my mum or dad. So I need to speak to my parents. I need to speak to my siblings. And then that's how it gets shared as well. I don't know if you wanted to add.
So from my experience, it is literally referral. Now I'm gonna just touch base on trust and small print. So a lot of people go to the bank because it's a brand. It's the Barclays Bank. It's NatWest. It's, you know, the high street. Sorry if there's any of them in here. Apologies, but it is what it is.
Don't even apologise for that, man.
I'm going to say it because they will go to them and say, oh yeah, but you know, I got my insurance through Barclays Bank. And they'll try and throw it in your face. And I'm like, okay, did you read your small print? And then they'll say, okay, why? What's with the small print? Make sure you get this looked at by an insurance advisor. What's the purpose of a bank? It's to hold your money. They're not there to advise you about anything apart from take your money.
And low key, just do the history of some of the banks and how they started out.
Yeah, exactly.
To know that they do not even in their design have us in mind to help us uplift.
Right, exactly. So there's a small print that says, make sure you get this looked at by an insurance advisor. Now, there's two types of insurance consultants. I'm going to remove the word advisor out of it. There's ones that call you 100 times a day. I'm sure we've all got them. They're sales. They are paid on the amount of calls they make, how many times they can close. They don't care. It's, oh yeah, you want £10? Okay, cool. That's what you're getting. We are paid on the advice we give. Insurance industry lately has changed completely. And the new laws have just come in, by the way. We have to base it on needs. So it has to be advised. There is a big, massive write-up before we can even submit. Because if that file gets pulled up, oh, you're losing your license. It's not worth it. I'm not about to lose my license because I just want the £500, the £400, or whatever it is. I'm not about to do that. It's not worth it. When long-term, I can advise a lot more people, it'll probably be more better for the both of us. So in that sense, it is always better to kind of say, right, what type of FCA regulations do you have? Look up their FCA. Are you an advisor or are you in sales? Is it intermediary or, what's the other word? Non-intermediary. Yeah. So yes, you have to ask them questions. And if you don't ask them questions, then you're sitting in front of a salesperson. If they're not willing to answer that, yeah, you're being sold to. I'm going to be honest with you. You're being sold to.
I think a key thing that Sharuk just said as well is the need, because the example example that I explained when I said the client had 300k covered to age 55, I had to ask, what is that 300k covering? And they couldn't answer. It was like, oh, it's just a number. It sounded good. Now, I wouldn't have done that. I would have said, okay, is the 300k covering outstanding mortgage? Is it to cover expenses? Not just pluck the number out of the air. Now, if you come to me and say, P, I want 500k, then I'm going to ask you, what for? What is it for? Now, let's scale that back down to cover your needs. Now, if you want a little extra because you're saying, yes, I want to leave my nephews and my nieces and so forth as well, then we can add an extra, but it's always going to go on what your need is.
If I can just get Harold to jump in as well, is anything in particular that you kind of would like to add to that conversation?
So just a quick one on generational wealth. It's a term we normally throw about quite loosely, but the acquisition of it is a completely different ballgame. So I had this conversation with my mum as soon as, I became an advisor. She said, I need to be the first person sure. So I said, okay. I said, sit down, mum. So I said, how much you want to leave me when you're gone? She said, and we made banter of it and whatnot. She said, listen, I know your dad would have liked you, but he didn't get the opportunity. So as I'm alive and I'm still here, I'm going to do my best to make sure that when I'm gone, you and your brother you're good.
Powerful.
I said, okay. She said, so write it down and just let me know how much it's going to cost. I said, no. I said, mum, I'll do that. For all of the things you've done for me, I'm going to do this one for you. So I insured my mum for a nice sum and I'm paying for mum's premium because it's a start of generational wealth when she's gone. Yeah.
And that's another thing. No one realizes you can actually own someone else's policy. So technically, I can own your policy. Obviously, I would need to have reasons. I need to be able to get hold of the death certificate, but I can. So how we've done it in my household, just to kind of touch base on that, is there's me and my two brothers. We ain't about to fight. So I've taken out a policy on mum and dad. My brother's taken a policy on mum and dad, and so is my other brother. We ain't fighting at the end.
You all have a policy.
We ain't fighting at the end. Everyone, you lot make your claims. We sat down as a family, we said this is a business. And I said, take one out on me, you lot all take out one on me, and we did it all together. Whoever goes first, we're a millionaire.
Just to break down for me, because obviously I'm the newbie, right? Yeah. I'm learning. You all have separate policies for your parents and each other.
Yeah, therefore I own the policy on my mum. My brother owns the policy on my mum, and so does my older brother. And
you're not moving like a positive mafia. You got contracts on everybody.
It's called generational wealth for a reason. It's a legacy. So it's about, we're not trying to sit there at the end fight. I'm trying to like, okay, we need to bury them. Well, they need to go back home. That's 40k to just get a dead body. 2 planes, by the way, 2 planes to take them back home. We're from Iraq, so it's 2 planes. 20k to put you on 1 plane, and that's a dead body. I don't understand it. So anyway, that's not even us on the plane, right? So that's 40k. I'm not about to fight with my brother over 40k and who's paying that. So let's just avoid that conversation. We've done it together and done.
So whose mind's been blown by this conversation so far? Yeah, come on, speak the things. It's incredible because I think it's that spectre of death that we so can't manage that we almost have a paralysis. And getting past that through this conversation, there's light, there's possibility. And I think definitely what Paula was mentioning about hospital bills, there's empowerment to have the kind of healthcare that can get you back on your feet, or to be environments where you get the melanated energy, you get the herbs and minerals to get you back to where you need to be without the fear of having to rush back to work.
Definitely. And I know the panel's probably going to be ending shortly, but we've been focused on life insurance. But there's policies called critical illness covers. Now, everybody knows someone these days that has had a critical illness, had a stroke, had a heart attack, and they're young now, or had an illness, been diagnosed with something.
The amount of people having strokes, in their 30s and younger, is crazy.
Yes.
They reckon it's 1 and 2 for cancer.
There we go, cancer.
Yeah.
And having a policy in place that, for example, that's critical illness, that's like a policy that if you are diagnosed with one of the conditions, you receive a lump sum payment. Again, to help you. I've got things covered that I don't want to wait on the NHS. If something happens to me, I've got a policy that if something happens, I'm allowed to say, you know what, I'm going private. I need this operation now, for example. And, things that you don't maybe understand is like when you've got these policies, if you've got children, your children are automatically covered underneath your policies for free. So we just spoke about those, but I just want you to know there's different types of policies that all of us need, to be fair. share, even if it's a little bit. All of us needs some form of type of policy. And as all three of us here, just again, because people might think, boy, getting advice might be expensive. But
free.
It's free. We provide free consultations, give you the information, and you are able to be informed and then choose what you decide to do. Now, as Sharuk said, some people run you down. I'm not one person going to run you down.
I ain't even got the time.
Right. I'm going to take one more comment from yourself, Sharuk, and then what we're going to do is throw to the audience for a few questions, and then we're going to wrap up.
Where do I start? Okay, so there's a few things. One, we need to touch base on inheritance tax just before, right? So anybody that owns a property, well, actually, let me just rewind. We all walk around with a 325k unless you're married. Any married people in here? Okay, so you're 630k on your head. So that's your value. That's your value. For those that are not, your value is 325k. Anything above that, that means anything that you own. After that, you're going to get taxed 40%, right? And probate will come after you, your family, and you will have about a month or two once they bill you to pay that bill, or they will take your assets, everything that you have owned. Yeah. So you mitigate that by an insurance policy. Yeah. A lot of people would say, but I want to gift it. 7 years gap. You still belongs to you. Yeah. So come and sit down. Let's have a chat. Do not let your assets go to our lovely king that waves, because he's waving for a reason. Right.
Powerful, right? Family, please get ready with your questions. So just throw your hands up. We'll come up with a microphone and we can get this conversation going for your own personal journeys. So I'm going to go to the back and then come to the front. Yes, my brother. Just say your name and your question.
Earlier on, this young man asked the question, if your policy runs out when you said 55 and the person was, what happens? Because you didn't actually explain what happens to the person if they overlive their insurance. What do you need to do as a person?
Thank you for that question. Every policy has a date, unless you've got a whole of life policy, okay? Every policy has a date. So if you outlive that 55, then your policy ends. You're going to have to start again, put another policy in. And the reason why that policy had a red bell for me is because when you're 55, now you're starting a policy at 55, so it's going to go up. You might have a smaller amount, but in terms of the cost of it, you're 55, you're more prone now to maybe be diagnosed with an illness. So the insurance policies are looking at you different. So that's why that flag up to me, because at 55, you're still young to me. So someone's got a policy up to 55 for 300k that wasn't covering a mortgage. Now, if it was a mortgage, for example, that was going to end when they were 55, mortgage free, then that makes sense, because now you don't need that policy to cover your mortgage anymore because your mortgage is been paid off for. But if it's just to say, I'm paying for this till I'm 55, I think you're very young at 55. And then once that policy ends, you'd have to start again. And it'll probably be a lot more money than if you had it in place to a later age.
Crazy, you have to start again.
Yeah.
Wow. Okay, I'm going to take a question.
I've just gone full-time in my business, and I just wonder what insurance you would recommend.
Directors insurance, one. Public liability, business insurance, business protection, employee benefits. It depends on your business. It depends what it is, what you do. So it's for us to obviously sit down with you. That's more of a tailored question to you than it is to a wider. So yeah, that's something that we can obviously sit down.
Just to add on to that question though, anybody in the room who are business owners, if you were to become ill or just couldn't work, is anyone paying your sick pay?
So there's something called income protection.
So there's something called income protection. For example, that if you were off work because you got signed off by the doctor that you were ill, then your income protection will kick in to provide you with an income till you went back to work.
Powerful. So we're going to wrap up this panel.
Can I just add one thing?
Of course you can.
I'm sorry, this is really important. I just want everyone to hear this. I just want to have a show of hands. Does everybody want to stop crime? Yeah? Stop crime. Yeah. Can we? Yeah? Okay. Do you think we can do it? Do you think us, frontliners...
Queen, we're going to have to, man.
Well, we're going to have to, yeah? Do you really think we can? No, I don't think we can. Right, I'm going to tell you why we can't. We're small fish. Yeah, they benefit from us being in crime. Well, there's crime, there's death and the killing and so on. But let me tell you something. If everybody in this room gets insured...
£1 million insurance.
$500,000 even. $250,000. If they don't cost that much, yeah? You'd have the insurance providers fighting for the health care, fighting for the education system. They will be doing the work for us, not us. Because guess what? They would want to protect us because they don't want to pay out.
Real
Yeah,
talk.
I'm going to end it there.
Jeez, that's a mic drop, but don't drop the mic. Don't. Right, family, as we wrap this up, it's been powerful. I've been educated, entertained, and inspired. Couple of quick take-homes. Interrogate the people you're looking to go into this relationship with in insurance. This is for life. So don't just go for the high street brands. Go for the people that you can trust. Word of mouth and community make a huge difference, okay? Start now.
Yes.
You know, they say the best time to plant a tree is 20 years ago. The next time is now. And small, if that's what you have. This is like a kind of like financial gym. Put the peg down, small, lift what you can, and then you say you can adjust that as you go. And read the small print, because sometimes you're being sold something by a seller and not someone who's an investor in your future. Any other gems that I might have missed that you feel was useful, give that to these guys now. You put your hands up and say something that you got from today's session that was inspirational or highly valuable. I'm just going to take a couple of gems. We're going to wrap up. Just throw your hand up and tell us what you got.
Insurance policy for your parents.
Yeah, that was super powerful.
I've been to several court cases that I've had to be invited to because they've said, oh, but don't you remember when my mum said my policy is this? And I'm like...
Easy now. This is where the trauma is.
And I'm like, I don't even remember the conversation. Like, do you know how many people I sit down with? And I'm having to stand in court and literally say, well, no, your mum was actually fit and well when she put that policy in. So
you know what they say, it's not money's the root of all evil. It's the love of it. When they start seeing that money above your head, they start moving mad.
Just to quickly touch on something. So if there are any of you guys who have policies in place at the moment, make sure they're in trust, okay? It saves any arguments. It's in black and white. You can't say, oh, mum wanted me to have 80%. No, it's there, yeah?
Brilliant. So please, huge round of applause for our team here. Talk about safety and insurance. Please, for Paula, Sharuk, and of course, Harold.